Okay, wanted to go over what does it take to qualify for a home loan in 2023. Well, we've got some different parameters depending on what loan you want to go look at or what kind of a down payment you want to do. Let's start with the FHA loans. So with FHA, you can go as low as a 550 credit score up to a 579 credit score, and that's going to require 10% down. So the debt to income ratios are going to be a lot lower at that point, because usually those are going to be a manual underwrite where we don't run it through the automated system. We're going to run that through the bank, and the bank's going to manually underwrite that. So we have to stick to certain guidelines and certain debt to income ratios. Now, as soon as you move up to a 580 credit score and move up all the way up to a 740 or a 760 credit score, you're allowed to do 3.5% down. Now those are going to get a little bit, those are going to spread out a little bit better with the parameters, because your debt to income ratio can be a little bit higher. You're still going to have to be in that 41 to 43% if you're between a 580 score and a 619 credit score. Until you hit that 620 mark, that's when you can start pushing the parameters. So when you get to that 620 credit score, you've still got the 3.5% down. But we can run the automated approval, and depending on what your total loan package looks like with job history and your debt to income ratio, sometimes we can push those up as high as 56% to get you qualified. So that's going to be one of the easiest loans to qualify for. Not to mention, FHA has just lowered their mortgage insurance premiums monthly. So they were 0.85%. Now it's dropped to 0.55%. So it's dropped about 30 basis points on that. With a VA loan, we can go as low as a 550 credit score and go all the way up to a 740, 760 credit score. Now those don't require a down payment. So if you qualify for a VA loan, we can usually get you qualified on those. Now those aren't going to usually go up to over 50%. You're usually going to need to be under 50% when you're doing a VA loan, because the VA loans are going to be a little stricter as far as their parameters on loan approval. But you can do the lower credit scores with those, which is nice because it opens it up as well. And we can do manual underwrites on the lower credit score stuff down to the 550. And then we start working up to the automated approvals, where you can push that debt to income ratio a little bit more, over 40 and 41%, all the way up to just under 50%, and usually get the approvals with those. So those are going to be our government geared loans. Now, when you're looking at a conventional loan, that's going to have a minimum credit score of a 620. But keep in mind, with a 620 credit score on a conventional loan, your rates are going to be a lot higher and your fees are going to increase, because everything's based off of credit score on the conventionals more so than the FHA and the VA. So you're going to definitely get a higher interest rate. Payment's going to be a little bit higher, and the mortgage insurance is going to be a little bit higher when you go to the conventional loan. So with the conventional loan, let's say you have a 620 credit score and you want to get that rate down. Well, if you've got revolving debt that shows on your credit report, we can always look at that and run the credit score wizard to see if you can pay down revolving debt by how much. Usually you want to get down to that 50% mark or just under that 50% mark on your high credit limit. And that can usually be done in 5 to 7 business days with a rapid rescore. So I can submit a loan for you at one rate, and we can get it in process. Let's say you found a house and you want to get moving on this. Well, we can do that. And then what we'll have you do is we'll run the credit score wizard. We'll have you tell you what credit cards need to be paid down by how much and what your score will go to. It'll give us a guesstimate figure what the score will go to. I use this all the time. It works for clients. It's great. And then what we do in the midst of the loan, after you pay the credit cards down, we submit a rapid rescore. And that's going to allow us to repull a credit report after the rapid rescore has changed all of your debts from what you've paid them down to, and give us current balances. So then we can submit that rapid rescore. It takes 5 to 7 business days. And then once we've got that back, I can repull credit, re-upload the credit to the bank, and they're going to let us use that higher score, and that's going to get your rate down. Sometimes it'll affect your rate by 0.5% to a full point, and then take a lot of those fees off for those points that the bank was charging for that lower credit score. So this is just a quick run through of what we've got for those 3 loan types. Subscribe down below. Keep watching out for the videos. I'm going to shoot one on jumbo loans and as far as down payment requirements and things like that for that and credit scores. So hit us up and we'll see you next time.